What's your name and what do you do?
My name's Steven Shadkin, and I help people with financial strategies to allow them to retire earlier. I also help them with how they can save money to get to retirement better, and what their retirement looks like, what their financial picture looks like after retirement. I also help people who are just looking for ways of making money, whether that's a part-time job, full-time job, or even just a side hustle. Help people do that as well.
Who's your ideal client?
My ideal client is people with children, people that just bought a house, people that are looking for strategies to help them retire, people that are, coming out of a job and they have a 401k and they need help with figuring out how to strategically allocate the money so that they're not going to lose money in the market.
What is the most common problem that you help people solve?
One of the biggest problems I help people solve is figuring out how they're going to protect themselves and their family should the worst case scenario occur, such as death or an illness. And then I also help people out with tax advantage wealth accumulation strategies.
How simple are some of these strategies?
These strategies are actually pretty simple once you break them down, but the whole point is to get people the education, because these strategies are not taught in schools and very few financial advisors even actually utilize these strategies, because most of them are just putting people into the stock market rather than a vehicle that's going to be tax-free and tax advantaged, so that later in life they're not having to worry about paying a huge tax on their money.
What are some of the most important questions you would ask someone in front of you that needs your help?
Some important questions I would ask them would be, when are you looking to retire? What does that look like for you? How much money are you going to need? What does your income look like now? Is that enough to provide for your family? And do you have enough insurance right now to provide for your family if something were to happen? And not only if you were to pass away, but if you were to get sick or have a disability or something like that, what would be in place to protect you and your family then?
What are some common mistakes you see a lot of people when it comes to life insurance and personal finance?
So a lot of common mistakes that we see are getting plans that don't make any sense. There's agents out there that write up policies the wrong way so that they make more money rather than helping the client. Another big common mistake is just not having any insurance at all or not having enough insurance. And that's just, something that you just got to talk to the right person to get in front of, or, hear from somebody who can actually walk you through what your retirement looks like. But yeah, that's definitely one of the biggest things.
How does someone figure out how much insurance they need?
So in order to figure out someone's insurable need, we usually use the DIME method, which looks at their debts, looks at their income, looks at how much they might need to pay off their mortgage, as well as leaving behind education expenses, for when their kids grow up and want to go to college. So usually we'll look to have at least a couple years worth of their income, sometimes up to 10 years worth of income, enough to also cover their debts, cover their mortgage, and then cover whatever they need to educate their children in the future.
How does someone know if they need life insurance or not?
Someone knows if they need life insurance or not because they usually have somebody that they care about, that if they were no longer around, then that person is going to be in a financially distressed situation without their income or, without their assets.
How much does life insurance even cost?
So life insurance, the cost can vary. It can be all the way, as low as $20 a month, all the way up to hundreds or thousands of dollars a month that people are contributing into these policies. Some of them have a cash accumulation account. So in those type of products, then you're actually contributing some of the money towards the cost of insurance, while on the other hand, some of that money is going towards a cash value, which is accumulating over time, gaining interest with the market as the stock market goes up. But as the market goes down, there's actually a 0% floor on the account. So they're not losing money in those years. They're actually staying safe.
And what should someone do if they have any questions for you about getting insured?
If anyone has any questions about getting insured, I do free educational sessions all the time. So you can just, give me a call. You can reach out on my website, book a time on my calendar, and I'm more than happy to sit down with you, educate you on everything. And then if you're interested and want to learn more, we can definitely talk and set that up.